Very pleased to be invited to do this presentation today. Mechanical done for you strategy, any market, any time frame. I love this topic. It's one of my favorites. In fact, you're not going to see me do too many other topics because I don't really have many other topics to share. This is my bread and butter strategy. Been using it for years. It's one of the first things I learned on my trading journey, and I'm proud to share this with you, and hopefully you can learn something as well and start applying it immediately. I do see lots of questions already coming in, and stay tight. I'm going to answer all those to the best of my ability, assuming I don't run out of time, but I do want to get through the meat of the presentation, but I will promise to answer everybody's questions. So everybody can see my screen. Before we get started here, we must always start off with the risk disclaimer as required by our regulatory governing bodies and our attorneys. Past performance is not necessarily indicative of future results or substantial risk of loss for trading. Only risk capital should be used to trade. You can't lose money in trading. So I'm sure everybody is familiar with the risk disclaimer. Where's everybody at? Where's everybody at in the world? Where are you joining us? We got several hundred folks in here today. I am actually in LA. So somebody typed in LA at the beginning of the show. I am in LA, Lower Alabama here on the Gulf Coast. Beautiful weather. Heard Scott mention something about dreary Chicago. I did spend some time in Chicago. Love the city, but I can't say I miss it terribly, but it's a wonderful city. Oklahoma. I was born in Oklahoma. Travis, where at? Nectar, Alabama, Ontario, Michigan, Virginia, Lancaster, Pennsylvania, Arlington, Motown, another UK, Western Illinois. Awesome. Okay, let's go ahead and get started, folks. I'm going to introduce myself once again. My name is Silas Peters. I'm the founder and head trader of Seasonal Swing Trader. That is me standing in front of my alma mater at the University of Alabama in Tuscaloosa. And those are my two beautiful blonde-haired beauties that you just got a glimpse of in the back of Jeanette's Jeep. And unfortunately, they're going to be that old soon, wanting their own Jeep. But 3 days after I graduated UA, I sold my car, packed up my small belongings, and I moved to the great city of Chicago, the old Windy City where Scott's from. And it's here where I cut my teeth in the commodity markets working at the Chicago Board of Trade. And it's here where it's really bitten by the trading bug and never really looked back. So while there, I helped run a global trading desk, placing and managing books of trades across the Americas, Asian, and European sessions, primarily working with large block order flow for hedge funds, banks, CTAs, large force spec traders, and the like. Also been a part of building and managing several futures and equity brokerage firms, managing operations, trading, back office sales, and support. Also worked as a private family office investment consultant. I hold or have held these various futures and securities licenses. And then in 2016, I launched Seasonal Swing Trader. So enough about me, let's talk about you. Does your trading desk look like this? Does anybody's trading desk look like this? This is actually not my trading desk. This is a bad joke. I found this on the internet. Thought it was funny at the time because I feel it is the general public's perception of what us traders do or what it may look like. Like we're stuck in a basement looking at all these monitors and flashing screens and widgets and so forth. But this is certainly not my trading desk. It did look like this in Chicago for obvious reasons, but I've since pared that down to a handful of monitors with quotes, charts, order entry, and internet just for day-to-day operations. But the point is, we do not need all this. This is a bunch of noise designed to cloud your judgment that will ultimately affect your trading decisions, which leads us to paralysis analysis. So who here is a victim of paralysis analysis? Are you a victim or have you been a victim? I'm raising my hand. I have been a victim, and it's no fun. Per Wikipedia, it's the state of overanalyzing or overthinking a situation so the decision or action is never taken, in effect paralyzing the outcome. So yes, a lot of you here are victims or have been victims, and we are here today to hopefully put an end to that, to make life easier so you can make a logical trading decision. So I appreciate everybody's interaction so far. Tell me, I like to see who I'm talking to. What do you trade? You trade stocks, options, futures, forex, cryptocurrency, any or all of the above? I trade stocks, options, futures, and forex on an active basis. Do not trade crypto on an active basis. I do have accounts or investments, if you will, across the internet. Don't even know how to get into half of the accounts, probably online. Don't really monitor other than Bitcoin, but I am invested. I view it more as a lottery ticket, but I do actively trade all the others. So we've got a lot of stocks and options traders here. We've got futures, a couple Forex traders, Sean, everything but crypto, same as me. So perfect. So lots of variety there. Good news. What I'm going to share with you today works in all those markets. Highly accurate, it's profitable, works in all time frames, and 99% mechanical. And most importantly, it is simple. So again, we're not here to teach rocket surgery today. We're going to keep things very simple. I like to keep my life simple and trading simple, and I'm sure that you are looking for a simple solution in your trading as well. So my agenda and promise to you today is we're going to learn a simple mechanical setup together that is repeatable regardless of the market or time frame. So at some point during the presentation, I'm going to ask you, have I fulfilled my promise? And I hope to see a lot of yeses. And if you stick around to the end, and assuming I have time and Jeanette doesn't kick me off, we'll take a look at some symbols and tickers and take a look at what we did on Friday. All right. So speaking of promises, the $10,000 trade promise. If you're here today, you may have seen or read something about the $10,000 trade promise, but full disclaimer, I'm not going to promise anything to you in trading or in life, but these were trades setups that we talked about in multiple free presentations. I'm talking about over weeks and weeks and weeks in free presentations such as this one, as well as in our paid services about possible setups in these markets. We're looking at crude oil, RBOB unlead, and also natural gas. We talked about a very specific setup that you're going to learn here in a few moments, and these went on to materialize and made their $10,000 profit predictions. We also talked about so-called sleeper markets in coffee and orange juice. You can see here from a 5, 15, and 30-year historical price perspective that the markets tended to bottom out at this particular time of the year. Does that mean that we went and bought these markets or went long? No. We had to wait patiently for the setup that you're about to learn, set up, and that's exactly what they did. They set up, went on and met their $6,000, $7,000, $8,000 per contract price objective. We also talked about markets in corn, soybeans, and wheat. You can see here from a 5, 15, and 30-year historical price perspective, they tended to bottom out or get quiet at this time of the year, and that's exactly what they were doing. That's exactly why we shared those ideas. Did we go get long these markets? No. We had to sit on our hands and wait patiently for these setups to occur. Again, the setups that you're about to learn, those went on and met their $5,000, $6,000, $7,000 per contract price objective. This is not a presentation about futures or commodities solely. Again, it works on all markets as we've already identified, but I'm just sharing with you ideas that we talked about. So who here is ready to see the setup responsible for this equity curve below? Now, this equity curve needs to be updated for 2019, but I can assure you that this line points even higher north. So absolutely, of course you are, you probably wouldn't be here. So here it is, drum roll please. It's the 1, 2, 3 pattern, also known as the 1, 2, 3 top or bottom. So who here is familiar with the 1, 2, 3 pattern? I would expect 99.9% of you to be familiar with it. It's one of the most fundamental technical patterns in the textbooks, talking technical analysis 101. I didn't invent it, but it is highly, and I mean highly, overlooked by most traders. And let's talk about this pattern. Let's talk about the setup. It's price action based. The pattern is comprised of a low and then a higher high and a higher low and a break of that higher high in the case that we're going long, inverse if short. Anticipates a change in trend from down to from up to down on a break below the 2 or B point. Anticipates a change in trend from down to up on a break above the 2 or B point. The strategy usually occurs at the end of trends and swings, can be an indication of a change in trend, can also be found within a trading range. So you may say, well, isn't this a counter trend strategy or a reversal type strategy? And in essence, it is, but we talk about ways to add filters to even increase the probabilities even more in our favor. I'll also stress that it works extremely well when the pattern sets up at significant areas of support and resistance. Other high probability technical patterns such as head, shoulders, tops, and bottoms, double tops and double bottoms, and so forth. So let's take a look at the basic mechanics. 1, 2, 3 top. Doesn't matter what asset class this is, what time frame. Again, we're just learning the very basic principles here. You can see that point 1 is the highest peak when we find resistance. Once we move back down and quit forming lower lows, we hit a number 2, and then the market retraces and pulls back. We get our 3. 1, 2, 3. We know that we're looking to get short on breaks or closes below the number 2. Let's take a look at the bottom. 1, 2, 3 bottom. Same rules apply, but it inverse. The market trades down, finds support, giving us established number 1. Market trades higher, pulls back, giving us established number 2. So the market trades lower. Market can come down as low as here, here, or here, as long as we don't take out the number 1. 1, 2, 3. We know that we're looking to get long on breaks above the number 2. We don't know what happened in this particular example, but we know we're looking to get long on breaks above the number 2. Let's look at some chart examples. 1, 2, 3, top pattern. This is a daily chart of the Aussie dollar, the 6A. If you don't trade futures and you trade equities only or ETFs, you can look at FXA, which is the ETF that tracks the Aussie. If you trade Forex, you can look at the Aussie US cross pair. But this is a daily chart of the Aussie. You can see the exact same pattern regardless of the market. And on a daily chart, for these example purposes, we're going to look at 52-week highs or 52-week lows. Those are going to be your highest probability setups, but you can dial that in, say every 6 months, every 90 days to find more opportunities. But on the daily chart, we're going to look at 52-week highs or lows. So here we have a number 1 point. Why? Because it's a 52-week high. Market trades lower, pulls up, giving us a 1, 2. Now we only retrace to the upside by about 4 or 5 bars there, and then we pull back. So we have a 1, 2, 3. Now we know that we're looking to get short on breaks or closes below the number 2. You say that's great, Silas, but what about the other important stuff? Where do I put my risk? Where do I put my targets? Where am I getting out? All that. Of course, that is a very good question. Important information to know. So we know that we're getting short on breaks or closes below the number 2. Our initial risk must always be above the high of the number 1 for a short. Your target is simply the distance between the high of the 1 and the low of the 2. So we measure from here to here and then down. In this example, it's about 225 ticks or $2,200 per contract. So yes, initially it is a 1-to-1 risk reward ratio. We're going to talk about later in other slides about how to manage your stops or you do trailing stops and things like that. But very simply put, you must allow the market to allow it to have time to work in its expected momentum. So you can see here, we were expecting to move to the downside. We start to break down. Then we can quickly move our stop down to the next areas of importance, resistance, or support. So once we start breaking down here, you can see that we can immediately cut our risk by more than 50% by just simply taking it down to the next area of resistance. All right. So let's look at another 1, 2, 3 top pattern. This is Walmart, WMT. Daily chart, we have a 52-week high, which is our number 1. We have a 1, 2, 3. Again, we could retrace all the way up here, up here, up here, as long as we don't take out the number 1, and we pull back down. We have a 1, 2, 3. So several days go by while we're waiting for the setup. So we already know what 99% of traders struggle with. Well, where am I getting in? Where am I putting my stop? Where am I taking profits? Things like that. We know that we're looking to get short on breaks or closes below the number 2. We know our initial risk is above the number 1, and we know our target is the distance between the 1 and the 2, which is about $5 in this example. You see that we traded to the downside. Let's look at 1, 2, 3 bottom examples. 1, 2, 3 bottom examples. This is a 15-minute chart of the E-mini S&P. So this is an intraday chart. So on intraday charts, whether you're looking at a tick chart, a 5-minute, 30-minute, etc., we're obviously not looking for 52-week highs or 52-week lows. It just wouldn't make sense. So on an intraday chart, what I'm looking for is a session low or session high. So how do I define a session low or session high? Well, very easily, I go back to the Globex Open. So if you're not familiar with futures or Forex, they trade darn near around the clock, 23/6. They open at 5 p.m. Central on Sunday afternoons, trade through the Asian session into the European session, into the US session, close down for about an hour in the afternoon, reopen and rinse and repeat until we get the final close on Friday afternoon. So wherever you start your trading day, whether it's a 2 a.m. European session, 6 a.m., last hour of the New York session, regardless, you're looking for new highs or lows from that point forward, going back to the Globex session. All right, so here we have a number 1 low on this chart. Market trades higher, pulls back down, giving us a 1, 2, 3. Aggressive traders would be getting long here on a tick or 2 above the number 2 high. You're into the trade. An alternative or more conservative entry method would either be to A, wait for the market to retest the breakout level, which it does more often than not, or 2, wait for the market to hook back up and through the number 2 area. That's the method that I like to see. Now, when you do that, it's going to keep you out of potential false breakouts. Sometimes we will pop up above the number 2 and then reverse and come back down. But what also happens, you're going to miss some profitable trades. Sometimes that we pop up above the number 2, it goes up and hits target, and we might miss a potential profitable trade. That's okay. There's plenty of other markets and other time frames to look at. All right. Now, this is a 1, 2, 3 bottom example on Apple. Should be AAPL. Weekly chart, hell of a way to catch some long-term serious position type moves. Here we have a multi-week low, 1, 2, 3. Also have a high probability double bottom. You can see that the trade is triggered, or the entry is triggered on this large bullish candle above the number 2. Trade sideways for a few weeks, comes back down and retest or hooks back above. That's where we get long Apple. How? We buy Apple stock, we buy call options, buy call spreads, sell other money, put spreads, etc. Now, I must show you what a failed trade looks like. Don't start throwing tomatoes and banana peels at me. They don't all work. There is no holy grail, but we're all big boys and girls. You already knew that. So here we have a 5-minute chart of the E-mini S&P. I probably took this in my live account. I like the setup. We're on a large vertical move here. We have a trend line break. We have a 1, 2, 3. You're either getting short here on breaks below the number 2, or if you wait for the alternative method, you wait for it to hook back down and through, and you're in for maybe 1 or 2 positive points there. If you exercise any type of money management, you're stopped out here at the next area of resistance. If you didn't do anything, you're stopped out here at the initial risk above the number 1. But I noticed that once I put this example on, we had a new 1, 2, 3 top. This high is higher than that high. 1, 2, 3. Breaks down below, you get a couple of retests, ends up being a profitable trade. Now, this is just a no trigger or voided example. It's neither good, bad, nor ugly. We have a 1, 2, 3. Looking to get long above the number 2. You can see the market breaks down, taking out the number 1 lows. So we start to count over. Here we have a 1, 2, 3. Looking to get long here. Market breaks down, takes out the number 1 low. We start the count over. 1, 2, 3. Finally get triggered into the long position. So let me take a moment here and tell you about why I like these voided trades or these no trigger trades. What is likely happening here? Can somebody tell me what is likely happening? We're having lower lows, lower lows, lower lows on the price action, but what is likely happening? We're likely having divergence. So whatever your favorite momentum oscillator is or indicator, whether it's RSI, stochastics, MACD, it doesn't really matter. We're likely having divergence, and that just means that we're having new lows here on price action, but we're having higher lows, or i.e. no lower lows on your favorite divergence indicator. And when that happens, that's just that added probability or added odds to an already high probability trade that I like to see. 1, 2, 3 pattern trade management. Again, a confirmation of entry is on a break above the 2 or the B point for a long, or a break below or close below the number 2 or B point for a short. Exit strategy. So if you're only trading one contract, whether it's one futures contract, one Forex contract, one option contract, or maybe even one share of stock, I would stress that you try and go for the distance between the 1 and the 2 point. It's uncanny how often, more often than not, it will go tag that to the tick and often reverse. But when you get to the chance or the ability to trade multiple contracts and you have that flexibility to scale, that's where you would take off, say, a third of your position, half your position, 2/3, whatever, and then you manage the balance based on what fits your trading style. They really come a dime a dozen. I like to target good old-fashioned support and resistance levels, trend line analysis, trail by moving averages. But again, you have to use what works best for your situation, whether it's Fibonacci numbers, PAR-SAR, things like that, okay? Now, I've already showed you that this setup works in any market, whether you're trading pips in Forex, Pepsi stock, pot stocks, or potash, pork bellies, or the Polish zloty. Also show you it works in any time frame, whether you're trading tick, hourly, 4-hour, daily, and so on. And on any trading style. Are you a position trader, swing trader, day trader, scalper? I'm going to take a swig of water here. Tell me what your trading style is. And I do see a lot of questions come in. I will go back and answer those. All right, so a lot of swing traders, and we got swing and position, weekly options, scalper. Scalper is scalping's tough. Got to be on your toes there. Day and swing, awesome. So the point is that you have to find out what your bread and butter is. I found that my bread and butter is 5-minute chart on the S&P, Nasdaq, crude oil, currency futures, 30-year bonds, and then the hourly and 4-hour for currency futures, FX, and then the daily really for all markets. That's where I got started in my trading journey, looking at end-of-day charts. This was long before the days of people sitting in a cubicle looking at quotes on their smartphone. Didn't have that luxury, if you want to call it luxury. I would look at end-of-day charts in the evening, early morning, do my analysis, place my trades, and off to the workplace. Had no clue what was going on in the markets. It's probably the best thing that could have ever happened to me, and probably the best thing for a majority of you. All right, so you've seen the proof. Let's look at some real trade examples. Not that what we viewed previously were fake trade examples, but let's look at some real examples that we've used in some of our services. We're gonna start here with crude oil. You guys and gals can read the text over here on the right. I'm gonna work over on the charts from left to right. Now, everybody's familiar with crude oil, probably one of the most widely watched markets in the world, whether you trade CL futures, options, USO, maybe other leverage ETFs. And here we have a daily chart, and we have a number one. It's a 52-week high. We have a 1, 2, 3. It's a smaller 1, 2, 3. I'll give you that, but it is a valid one nonetheless. We knew immediately where our entry was, where our risk was, and where our targets were. We're looking to get short on breaks below the number 2, get a couple of days of retest, quickly meets its $3 or $3,000 per contract price objective. Then you can see we go into sideways mode or range-bound mode. Now, I get asked all the time, does it work in range-bound markets? Well, sure it does. If you want to get caught up and trade all of the 1, 2, 3s and the ranges, go for it. You can help yourself. You certainly can. This is a 1, 2, 3 in a range. Looks like it broke above, met its profit objective. Very nice trade. I'm only looking for new highs or new lows. We get a new high here, a new number 1 point. Why? Because this high is higher than that high. So we get a new count. 1, 2, 3. Market breaks down below. You get 3 or 4, maybe 5 days of retest. So perfect for end of day traders. Now, I got really excited about this particular setup. Why? Because 1, we have a 1, 2, 3 top, which we already know is a high probability setup. 2, we are at a time of year from a seasonal perspective where crude and the energy markets tend to decline. So when we have those two things line up, that's what I call the perfect marriage in trading. So we got short. We shorted crude futures. We sold call spreads. We bought puts, traded USO, other leveraged ETFs. Quickly met its $4,000 per contract price objective, and then ultimately traded down over $20,000 per contract. Now, we didn't catch that entire move, but we damn sure caught a large chunk of it. And all we did is we trailed our stops until we either got A, stopped out, or B, we had a reversal. So we have a potential 1, 2, 3 right here. Market breaks down below, taking out that number 1. We start the count over. Here we have a 1, 2, 3. Got really, really excited here. Started licking my chops about getting long. Why? We have a high probability 1, 2, 3 bottom pattern, which is what we've been covering. 2, we have my second favorite technical pattern, which is a triangle, and this is a very beautiful triangle. And 3, we are now at a time of year from a seasonal perspective where the energy markets tend to go higher. In fact, this is one of the most, this is one of the best seasonal setups that I have in my arsenal, is to get long energies around this time of the year. But what happened? Instead of going and betting the family farm here and getting long, I had to wait patiently for the setup to trigger. The market broke down before we broke above the number 2, taking out the number 1 lows, traded down another $10,000 per contract. Kept me out of the trade. So here we have a 1, 2, 3, new 1, 2, 3 bottom, finally gets triggered long, goes on to meet its $5 per contract price target. All right, let's take a look at gold. This is actually GLD, the ETF that tracks gold. when I'm looking at commodities or futures, I like to look at the actual underlying commodity futures markets because it's going to be a lot cleaner. You're not going to see all these gaps. It's a lot more fluid because they're trading around the clock. But regardless, if you want to start with the ETF, that's fine. You're going to see the exact same setup. So here we have a 1, 2, 3. Looking to get short on breaks below the number 2. Very crystal clear there. Get a couple of retests. We short gold futures by put options. We reach our $4 profit objective, continues to trade lower till we get a new bottom. 1, 2, 3, also have a double bottom. Market trades above the number 2, retest, reaches $2 profit objective, and then we go into sideways market. So here again, similar to that crude example, we have a range bound 1, 2, 3, 1, 2, 3, very nice move to the downside. That's okay. If I miss that, I'm watching 35 other commodity markets, 35 other currency markets, and dozens, if not hundreds of equities and indices. I'm not worried about catching all the range bound trades. So here, I'm looking for new lows or new highs. We start getting new lows. These lows are lower than these lows. So we're looking for new 1, 2, 3, 1, 2, 3. Looking to get long here. Uh-oh, market traded lower. I don't know if you can see that. Gaps down, takes out that number 1 low. No worries. We start to count over. We get a bit better buying opportunities. 1, 2, 3. We gap higher 2 days in a row. Can guarantee you don't see the gap on a futures chart, but anyway, we gap up 2 days in a row, pull back, have a trend line retest, and that's where we get long gold. We can buy gold futures, buy call options, sell out of money put spreads, whatever your trading style is. So this is what I like to say, like, you know, there's so many people out there trying to make predictions, all these expensive newsletters and things saying, hey, gold's going to go here and gold's going to go there. These pundits, who cares? Look at the chart, look at the price action, and let it help dictate where gold is likely headed. Let's look at Delta Airlines, daily chart of DAL, Delta Airlines. 4 trade examples here. We have a 1, 2, 3 bottom, $4 up, 1, 2, 3 top. Market gaps down below the number 2. I have members and students that will take all these, so they're selling the stock, buying put options. I like to wait for the retest or the hook back up and through, but we do get another chance to short this market. 1, 2, 3, trades aggressively down below the number 2 area, get a small retest, goes down $8 plus. Here we have a 1, 2, 3. Market trades above the number 2, trades favorably, pulls back, gives a retest, and then it goes up another $8 plus per contract. Forex traders, this is a 4-hour chart of the CAD Swissy, Canadian dollar versus Swiss franc. Can I do a quick audio check? I just had one person say no audio, but I want to make sure I'm not talking into a black hole. Just give you a couple of confirmations. All right, cool. Thank you. So 4-hour chart, CAD Swissy, and we have a 1, 2, 3 bottom. Also have a double bottom here on a 4-hour. Again, the traders that like to work buy stops would be zipped into the trade immediately, or if you wait for the retest or the hook back up above, we are long into our 70 pip profit objective. Now we're looking for new 1, 2, 3 tops, 1, 2, 3, new highs, 1, 2, 3, new highs, 1, 2, 3, new highs. Finally get a 1, 2, 3 up here, breaks down below, get a couple retests, and goes and meets a 40 pip prop objective. Okay, I think it's just unique to that individual. Tell him to refresh. All right, I get asked all the time, does it work on an intraday chart? Well, absolutely, of course it does. This is a 5-minute chart of the Nasdaq, E-mini Nasdaq. Here we have 3 examples, 1, 2, 3. Market breaks above number 2, hooks back up above, reaching its 13-point profit objective. Here we have a 1, 2, 3. Breaks down below the number 2, trades sideways, gives us a little bit of heartburn as well. Finally breaks down here, flushes down probably in the last hour of the session, reaches 20-point profit objective. We have a 1, 2, 3, breaks above. If you're lucky enough to get long on the retest there, you are filled in about 2 bars there for your 30-point profit objective. So why are you here? You're here to learn my mechanical done-for-you strategy for all markets, all time frames. This is the part of the presentation where I ask, have I fulfilled my promise? Have I fulfilled my promise up to this point? I'm going to take another swig of water here. Hope to see a lot of yeses when I come back. All right, awesome. Thank you for the kind comments. If you said no, I'd have to seriously evaluate what I was doing, because I don't know if I can make it any easier. But wait, but wait, there's more. You know this was coming. Usually when people say but wait, it ends up being a bad thing, but I can assure you that not in this situation. What if the strategy was automated? What if the strategy was plotted onto your chart for you? What if the trigger entry and the target were drawn for you? And what if your platform could scan the markets for you and tell you when there is a pending setup? You would say that would be pretty awesome, and you are in for a treat. Remember the examples earlier. Does everybody remember the examples earlier? I hope you do, it's just a couple minutes ago. This is a chart of crude oil, the crude oil chart we just looked at, daily chart. I'm gonna start off with this example in the middle. I know you're smart boys and girls, but let's talk about what all these colors and arrows and all that jazz means. So here we have a green arrow, that's your number one. Your red arrow is your number two. Your blue arrow is your number three. Excuse me. So 1, 2, 3. Now, what is this white chevron or this white stealth signal? All that is, it's not a sell signal. This is not a buy signal. It's just telling you that, hey, we have broken or penetrated the number 2. So that's why it's pointing down. This is the candle that broke below the number 2. This is the candle that broke above the number 2. So if and only if when that happens, you're going to get this chevron print. And if and only if that happens, you're going to get these 4 pretty lines plot onto your chart. So what are these lines? The blue line is your breakout level, or could be considered entry level. Your red line is your risk or your stop level. Your lime green line is what I call TP1 or take profit 1, profit objective 1. Your dark green line is TP2 or profit objective 2. Remember, the lime green line is just the distance between the high of the 1 and the low of the 2 measured down. Green line is, our TP2 is 2 times the distance of TP1. These green arrows, what the heck are all these green arrows? These are just saying that we're making new lows. We're starting new number 1 counts. So we have low, 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 low. Finally stop making lows, pull up, give me so 1, 2, 3. We don't break above the number 2. Hence no chevron, hence no lines. Here we have new lows, 1, 2, 3. This is the setup here that I was looking to get long on. But what happens? Markets breaks down, so no chevron, no lines. We finally get that last long setup right there. All right, so gold. Here's the gold example. 1, 2, 3. Breaks above TP1, TP2. We go into that range-bound market right there that we talked about. We're starting to make lows. You can see very clearly. We're trying to find a bottom down here. Here is the 1, 2, 3. Here's that gap up, comes back and retests, hits TP1, TP2, and you see we're starting to make a new 1, 2, 3 top over there on the right-hand side. And then here's Delta Airlines. Probably getting a little bit redundant by now, but I just want to show this to you. So here we have a long, a short, and then a long. And then what about the 5-minute Nasdaq trade? So here we have a 1, 2, 3. We break below the number 2. We hug the breakout level, hits TP1, hits TP2 to the tick. TP2 happened to be a new low, so we get a new number 1 count. 1, 2, 3. Breaks above the number 2, hooks back above, gets us into TP1. Doesn't quite hit TP2, but it's good enough for government work. And then we go into range-bound market. New low, 1, 2, 3. Just nips above the number 2 high, which triggers the pattern, and then we're long, hits TP1, and as we're waiting to hit TP2, you can see we're making new highs. So we're starting a new 1, 2, 3 count. We finally get hit TP2. We have a 1, 2, 3, breaks below the number 2, gives you a retest, hits TP1 and TP2. So is this training for you? Only you and you only can answer that. If you're new to the markets and want to jumpstart your success, if you're an experienced trader and want to add another arrow to your trading quiver, if you're tired of all the noise that we talked about, the indicator overload, paralysis analysis, you just want to simplify your process, or if you want a very specific step-by-step mechanical plan and maybe something you want to do even part-time, this training could be for you. So I'll tell you a quick story here, and Jeanette covered it kind of for me already at the beginning, but when I had this thing built out and before I kind of released it, I brought my wife down to my office, who is a ballet teacher. I brought my 2 girls down who are like, I think 4 and 5 at the time. They don't know a flying flip about the market. Trust me, I don't even really understand what I do, but I showed them what I just showed you. And after they got through all the colors and the candlesticks and all that, I said, let me try to tell you what I'm trying to accomplish here. And after some time, they got it. They understood. They're like, yes, I understand. So my point is, if they can understand it and they can get it, then you certainly can too. I don't remember kindergarten, but I do remember learning how to count to 3 and learning my primary colors. That's about all you need to know with a dash of common sense. So I do have a special offer for today's workshop attendees only. And we do limit this to 25 because I do manage my own support box. I do have a support team, but I do actually respond. I am a human. I do communicate with my members. I love getting feedback and talking to them, what's working, what's not, and so forth. So here's your special offer. It's the 3S code high-low indicator and scanner for the following platforms: Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Also going to get the chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan updates across stocks, futures, and Forex. So what the heck is the 3S high-low indicator and scanner, you ask? Well, let me refresh your memory. Here is the 3S code. This is a daily chart of Crude. You can see the 3S code here on a daily chart, printing the arrows, printing the lines for you, printing everything you need to know. Entry, stop, target. There's a short, there's a short, there's a long. Daily chart of Bank of America here. There's a long, there's a long, there's a long. Daily chart of Love, LUV, Southwest Airlines. Here's a short, hits TP1 to the tick. Here is a short, whoops, bad trade. That's a loser. We get stopped out, have another chance to short. 1, 2, 3, it's TP1, TP2. Remember when I said, why do all the work when we can let technology do the work for us? This is a snapshot of my Thinkorswim platform where I'm scanning the markets. You can see I'm scanning for 1, 2, 3 top patterns in the Russell 1000, only stocks that have options on them, $20 a share or greater. Hit the green scan button, voila, I get my results. I also have one monitor dedicated to watch list. So here I'm scanning across multiple asset classes, multiple time frames, looking for 1, 2, 3 tops and bottoms, and you can do the same. We've been looking at Thinkorswim. This is what it looks like on TradeStation. So here's your indicator component. Here's your scanning component. Here's what it looks like on NinjaTrader 8. Here's your indicator component right here. Here's your scanning component. Here's what it looks like on TradingView, 4-hour chart of Apple. Here's your here's a long setup. There's a long setup. And then here's what it looks like on MT4, 4-hour chart of the Euro Kiwi. There's a long, there's a short, and then there's a long. So full disclaimer, there is no scanning component on MT4 or TradingView. It is what it is. Unfortunately, they don't have a scanning component. Now, if you want to prove me wrong and tell me that there is, please reach out to me because we will have that puppy built out. But right now, you have scanner for TOS, TradeStation, and NT8, and then just indicator only for MT4 and TradingView. Now, we know that there's no real crystal ball in the markets, but I do like to view this one as something that provides me a process and plan each day. I let the platform and the technology do the scanning for me, locate the setups, go into my platform for entry, and then I manage the trade through the exit. And you can do the same starting today with the 3S code. So here is the offer for the first 25 people. 3S code high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4. Chart pattern principle PDF manual on trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan setups across stocks, futures, and Forex. We've recently offered this on the internet at these prices, $19.97, $14.97, and $9.97. No joke, but because you are a because you are a guest of Toaster Traders today, we are pleased to offer this for a one-time fee of $397. $397. The offer link is seasonalswingtrader.com/code 2020. Seasonalswingtrader.com/code 2020. I'm going to put that in the box there for you. Hopefully you can see that, seasonalswingtrader.com/code 2020. And I'm going to answer all of your questions here. I've got a ton of them to go through. Hopefully I have some time. And let's talk about what you're going to get one more time. So the indicator scanner includes a visual plot of the 1, 2, 3 top and bottom reversal areas, entry, X, stop, target levels, customizable settings, multiple look back periods. You can scan for setups only or trigger only or both. So let me tell you what that means. When we first had this built out, we only had it for setups only. Had a couple of members write in, say, hey, I only want to see those that have triggered, which means those that have actually broken above or below the number 2. I said, well, let me go back to my programmer, see if that can be done. He said, yes, we had it built. We included that and all of the other enhancements and updates. We didn't charge a single red cent. We sent out an email and said, hey, we've made an upgrade to the software. We didn't ask for a penny. And we'll likely do the same going forward. Honestly, I don't know what else we can do. If you want to customize the settings, you don't like red, you want hot magenta, you don't like arrows, you want dots. If you can change the colors, you can change the look back periods, you can look for tops, bottoms, or both all at the same time. You can scan for intraday setups as well as swing setups at the same time. All right, so all of that is customizable. Bonus 1, 90+ page PDF manual, chart pattern principle trading guide. You're going to learn how to read charts, identify trends, range markets, learn additional strategies, seasonal market trends, other chart patterns, and more. Bonus 2, 25 top option strategy guide, literally strategies for all account sizes and education. If you're just learning to trade basic calls and puts to more intermediate advanced, such as condors, butterflies, verticals, diagonals, and more. And then bonus 3, access to weekly high-low scan updates across stocks, futures, and Forex. So you have the scanner, you will own the scanner, and whatever parameters or variables that you decide to input that works for you, that will be independent to you on your computer, okay? But we have decided to build out a special area in the member section where we update once a week swing trades across stocks, futures, and Forex based off the daily time frame. Now, here's some testimonials that have come in. I don't ask for these. They come in all the time, very humble, but most importantly, I'm pleased to see that people are taking action using the 3S code and making money with them. And here's just another example of trades that were all initiated using the 3S code. You see trades here in crude, unleaded gas, the pound, euro, nat gas. And I do eat what I cook. These are snapshots of my Thinkorswim account where I do most of my equity options trading, and my futures account where you can see I've got crude options, cotton options, copper options, yen options, nat gas options, and the S&P. And again, just another example of a nice, easy, clean 2-point trade here in the E-mini S&P on a 1, 2, 3 top pattern. So here is the offer once again, the 3S code, high-low indicator scanner for Thinkorswim, TradeStation, NinjaTrader 8, TradingView, and MT4, chart pattern principle PDF manual trading guide, chart pattern cheat sheet, 25 top option strategy guide, VIP email support, and weekly high-low scan setups. The offer link is seasonalswingtrader.com/code 2020. And let me go to the chat box here. Man, I've got a bunch of questions. Guess that's a good thing. Or I didn't do a good job explaining. Let's see here. Just thank you for your patience. I'm kind of just scrolling up here. Do we need the 52-week high to establish the 1, 2, 3? No. So you can customize your settings, and I'll pull up a chart here in a few moments. You can change that. Like I think my look back period is 126 bars, which is equates to about 6 months. So it's going to find new highs or new low every 6 months. If you want to find more setups, more opportunities, you can dial that number in even tighter. If you want to see less opportunity, you just increase that number. All right, and you can toggle to turn the custom look back period off and on. Swiss franc years ago went nuts. One contract move was 50,000. I do remember that stop would have been blown through. So what you, I'll share with you a little secret setup that a lot of people don't think about when they swing trade futures. Is instead of using just a stop on the futures contract, which many people do, is you can use options. So if you are swing trading futures, sometimes I like to use an option as my stop, and that protects me from, say, weekend gaps or some type of exorbitant news event, unfortunately like a bombing or war type situation, something like that, is you can use stops. And now that they've got weekly options on a lot of the contracts, including the Swiss franc. So if you're long the Swiss franc and you're going into the weekend, maybe you're worried about gap risk or something, some shenanigans by the central bank, you can just buy a put option. You can buy a put option. So yes, it will be an eroding asset, but in case something happens, like a black swan event and the market gaps down, you have that protection, and so you're not worried about the gap through. That's kind of a other topic, but that is a way that you can protect your position. Otherwise, it's just unfortunately part of the business. Sometimes it happens. It doesn't happen often, but it can happen. Can I demonstrate what you mean by the distance between the 1 and the 2 point? Sure. So what I'll do is let me I just pull up a chart. Ignore the turquoise lines there. Those are just price levels that I've drawn out. So our target is the distance between the 1 and the 2. So the low, ignore this dark green arrow, the big one. So you measure from the bottom of the number 1 and to the top of the number 2. That's the distance. So let's say that's 100 ticks. Then you add 100 to the top of that 100 ticks. That gives you your profit target. So I hope that clears that up. Is more money required to swing trade than position trade? Not necessarily. It's going to require the same amount of money regardless of when you exit. How do I point out the 1, 2, 3? Well, using the 3S code. When doing these, do you take into account the overall trend to make sure you have our agreement? Yes, I will look at longer term time frames, but remember it is a counter trend or reversal type strategy. But we talk about ways in the members area, filters, things that we can do to increase our odds. A couple things I like to do. Look for divergence. Again, whether that's RSI, MACD, stochastics, it doesn't really matter. Also use some common sense things like I will not trade directly into say a 200-day moving average. I won't sell into 200-day moving average support, things like that. So here's what the members area looks like once you're logged in. This is the weekly high-low scan update that we talked about. You just hit that drop down and you can see the setups for the week. Here are all of your resources and bonus materials, some unannounced. So setting up scans, customize the indicator, day trading, swing trading. You scroll down here, we've got very easy PDF and video installation guides for you. How to set up. Here's one on adding the little seasonality widget inside Thinkorswim. That's not a requirement. That's just a little extra tool there if you want to trade in line with seasonality. TradeStation, V10, V9.5, NinjaTrader 8, TradingView, and MT4. All right. So yes, we do offer support. If you are here today able to log into your computer, you're probably not going to have any issues. You literally log in, takes you about 5 minutes to download and set up, but we're not going to leave you hanging, not going to leave you high and dry. We do have a support team that will help you set up. He can even do a remote session where he logs into your computer and sets it up for you. Won't a white signal against a white background be nearly impossible to see? Yes, just like a black signal would be impossible to see against a black background. So you can change your background or you can change the arrow colors to your liking. What do I mean by chevron? So this is the chevron, this little white arrow. It's not a buy signal. It's not a buy signal. Yeah, we can take a look at, we'll take a look at the symbols here, but let's see. So you want to take a look, we'll take a look Friday's action here on crude on a 5-minute. And we had basically a textbook set up there in crude oil. We talk about, again, things that we do, why we take trades. We only had one setup. One, I was not up at 5:30, but two, I don't take these. I want to see price close above the number 2, and I like to see the short-term moving averages cross. This one we had crossed. We also had divergence. Perfect setup. Look at TP1, happened to be right at the 200-day. When we have a 200-day or moving average nestled at TP1, it's a high probability setup that the market is likely will gravitate. Price action will likely gravitate to. Not NT7 at this time. Not have NT7. Does this scanner scan the entire market for 1, 2, 3? It will scan whatever instruments or whatever markets you choose to look at. So depending on what you use, Thinkorswim, TradeStation, if you only set it to select again to scan against the Forex market, it's only going to scan Forex. If you choose the entire universe of instruments, if it allows that, it's going to scan everything. If you just if you just choose futures, it's going to scan futures. If you just choose weekly options, it's going to scan across weekly options. We don't have a trade room, but we are looking at some things coming, here in 2020, such as maybe like a private Facebook group, maybe Telegram or Discord type channel where people can come in and congregate, share ideas, setups, maybe share settings and things like that, what's working, what's not. What platforms does the indicator support? Indicator right here. Thinkorswim, TradeStation, InduTrader 8, TradingView, and MT4. So no, it does not work on we do not have it built for E-Trade at this time. It's yours forever. You do own it. Unfortunately, I will not be around forever, but so as long as I am around, we will support the product, but you own it, you download it, and you can have at it, and we can part ways. I hope we don't. I would love to stay in touch with you, but if you want to download it, use it, and go off into the sunset, you can. But all the educational material and the indicator are yours to keep. This is no, it's not a subscription. This is not a membership. So no hidden fees, no hidden auto renewals, no shenanigans or tomfoolery there. Not interactive brokers at this time. Yes, you can download it on multiple platforms. Randy, that's something totally different. Yes, you can email me at support@seasonalswingtrader.com with additional questions. All right, thank you, Brian, Roger, Mo, and Claire. Thank you all for joining. I look forward to seeing you as well. Let's see. Yes, you can use it on more than one computer. Yes, this is live. Yes, Mike, you can install it on TOS and NT8. Can change the candle types or the bar type. You can, if you want to use bar, Renko. One last thing here. I know I'm running out of time. So we are working in the background on building an automated strategy like an EA or a robot. So everybody that gets in on this special offer will be grandfathered into a very special launch price of that. We're very excited. We're working out all the, working out all the kinks, trying to perfect it. And we will be sending out a survey or a questionnaire to all the owners asking for feedback on what some of the parameters and things like that they like, so we can build it out and have it optimized as best as possible. So this is, for really looking for automation on, say a 233 tick, 1 minute chart, smaller time frames, but even, hourly, 4 hour, things like that. We'll do that for futures first and then look to roll out in Forex and then maybe stocks. I do not day trade stocks, but I do have people that trade a lot of the big names, Apple, Facebook, Amazon, things like that. Yes, you can scan your own symbol list. So I build out my own custom symbol groups, and then I can scan across that. I do that in TOS. I'm pretty sure you can do that in some of the other major platforms. You're welcome, Haley, and thank you, Bruce. You're welcome. All right, I think I'm out of time. I want to be respectful of the next presenter. Thanks again for all the questions, comments. If I missed any, email me at support@seasonalswingtrader.com. I'd be happy to get you up and running, answer anything else that you may be thinking of, even after the presentation. Thanks to Jeanette, my good friend Jeanette, and the rest of the crew, and look forward to Mark's presentation. Everybody have a great weekend. Take care. Look forward to seeing everybody on the inside. Have a good one. Take care.